Okay, this one is work in progress. That means this is a manufacturing account. Okay, so work increase WIP opening more than opening inventory, less than closing inventory. Okay, so our cost of production start from the prime cost, and then factory overhead, and then after that WIP. So WIP, we have opening inventory minus closing inventory. So let's example, here got 3,000, here got 4,000, because they say increase closing inventory more than the opening inventory. So that now we reduce by 1,000. So your cost of production will reduce by 1,000. Okay, so come to this cost of production, will move to the income statement under cost of sales. Your cost of sales, one part of the cost of sales is the cost of production. Cost of production decrease 1,000. Cost of sales will also decrease by 1,000. So in this case, the answer should be A. Okay. Okay. This one is, what is not a limitation of the inter-firm? Okay. The limitation of inter-firm comparison. Accounting record do not include the skill of workforce. This one we don't have. This is one of the limitation. We can't assess the other non-financial impact. Business may have different accounting policy. Different accounting policy given you the different calculation. For example, the depreciation will give you the different impact on the financial result. Business may have different sales price. This is very common. Different company, they have their different strategy on the sales. So this one should not be the limitation. The available information may not relate to typical year, because the issue of the effect could be happen in future. So you will not able to predict what is the going to be happen. Sometimes what you budget, what you do may not, your especially like provision, you estimate your car 10%, maybe something was happen, then cause you have the different impact on the calculation when you this calculation on the depreciation accumulated upon the disposal. So this is the problem that when we do the accounting, when we do the estimation. So this one, not a limitation. This should be the C. A trader provide the following information for the year ended 31st May 21. So this one, you have trade payable. So balance BD is in here. And then balance CD is in here, 4200. And then credit purchases is in here, 319, 375. What was the trade payable turnover? Okay, this one you have to take the trade payable divided by the credit purchases. In this case, times 365 days. In this case, this is not relevant. You take the closing, not the opening. So the closing is 42,000 divided by credit sales, credit purchases, 319, 375 times 365 days. So let's calculate. So 42,000 divide 319, 375 times 365. So we get 48 days. So the answer should be C. Okay, next move on. Okay, James is an accountant and operate as a sole trader. Which item would not appear in his statement of financial position? So statement of financial position for the sole trader, retained earning won't appear because this is under limited company account. Okay, this one will not appear. So this one will appear, long-term loan, trade payable also will appear. So not appear is number 2. So the answer should be C only. Okay, next. N and B are the partners and share profit equally. So here, this is the information. What was the N's share on the residual profit? So the profit for the year plus, and then minus interest on capital, minus interest on capital. So this is the two things. This one, we are not taking in. So the calculation for the appropriation account is start from the profit for the year, plus if you have interest on drawing, this is a drawing, this is not interest on drawing. So this one is not taken into account. Minus interest on capital, minus salary. Okay, so after that, get the balance, then you share the profit among the A and B. So let's recalculate first. So this is 20,000, and then interest on capital. Here, this one 0. Interest on capital is 9,000. This one 0. So left with 11,000. So divide by, because share equally, divide by 2. 11 divided by 2, we get 5,005. So the answer should be A. Okay. Next is which statement about a receipt and payment? Okay, this receipt and payment account under club is incorrect. This actually is like a bank account, okay, or cash book. It includes amount prepaid at the end of the year. So whatever pay, so long as you pay, you will put into the credit side. So this is the amount prepaid sitting in here. Okay, the amount that you pay. It shows the surplus for the year. Surplus, this one refer to the income and expenditure. Okay, which is your income minus your expenditure. Non-monetary items are excluded. Excluded means, for example, your depreciation, non-monetary item. Okay, so this depreciation is not sitting in here. This one, bank is not taking the depreciation. Okay, so this one excluded, correct? Because we only take money in, money out. Okay, the balance represent cash. Yes, this balance brought down, balance CD is referred to the cash and bank account balance. Okay, so from the list in here, which one is incorrect? Means that it show this one, this is wrong. This is under the income and expenditure account. This, it will show balance CD, balance BD. Okay, that's all. For next one, we go to the next. Okay, the current ratio of X is 2 to 1. The current ratio Y is 1.3 to 1. So here X company, here Y company. Okay, what does a comparison of these two ratios show? Current ratio is the current asset to current liability. It show that the ability to pay the short-term debt. So if comparing these two, X is better than Y. Okay, X has fewer liability than Y. We do not know because this is just a ratio, not the number. So we don't know whether more or less. X has more liquidity than Y. Basically, yes, because these two, more is better. This one higher is better. This one basically is a benchmark for the current ratio. Y has fewer current asset than X. This one, we do not know. As I say, fewer liability, fewer current asset, we do not know because this is just a ratio, not the number. Why have more inventory? We also don't know how much the inventory inside here because they didn't give the information. So basically, current ratio, it just indicate the liquidity. More the number in front here higher is better. So the answer should be B. Okay, let's look into the next. It was found that the closing inventory should has been 400. So this one, they say this one is wrong, should be 400. So now is a closing inventory understate. When closing inventory understate, cost of sales should be overstate. If you put 400 in, it will reduce. Okay, reduce by 100 here. Okay, next is that when cost of sales reduce, gross profit, this one increase, this one over closing inventory understates. This is understate, cost of sales overstate. Cost of sales overstate, gross profit over understate. So this one have this same direction. Next is that it was found that the correct rate of the inventory turnover. Okay, the formula for inventory turnover is that cost of sales over average inventory. Okay, so this is a formula. Now we calculate the original given first. So the cost of sales is here is 2400. Divide average. Average is this one plus this one. 100 plus 300 divided by 2. So let's count how much of it. 2004. 400 divided by 2. So we get 200. So this one 200 divide 200. So this one is 12. Okay. So this is 12 times. Now we change into, if I change this one into 400, so this one will reduce, become 2300. Okay. 2300 divided by 100 plus 400 divided by 2. So we get 2300 divide 500 divided by 2, 250. So 250 divide, so we get now 9.2. So now this number decreased. So what was the correct rate of inventory turnover? This is the amount should be. Okay. And next is that. Okay, we go to the next question. Okay, Raj and Rahib are the partners, share profit loss 2-1. Raj is entitled to the annual salary. Okay, Raj, Rohit. Okay, 2-1. And then Raj is entitled salary 3,000. The profit for the year ended was 14,000. On the 1st Jan 2020, current account is in the debit side. So current account 1,008. What was the credit balance Raj current account on the 1st Jan? Okay, let's recount first. So the profit for the year for 1400, salary had to minus 3,000. Okay, the share of the profit will be 11,100, and Raj is getting 2. So 211. This one is 11100 divided by 3 times 2. Okay, because he get 2 portion of it. So 11100 divided by 3 times 2. So 7,004. This is a share of the profit for the Raj. Okay, and then the salary 3,000 is in here. Then after that, the balance CD, the question is asking the 1st Jan. That means this one transfer to here, which is balance BD here. It's asking. So take the total credit 74 plus 3,000 minus 1,008. So I get 8600. So the answer should be A. Okay, next is A. Which international accounting objective are described by the following? Okay, you have 4 objectives: comparability, reliability, understandability, and relevance. Okay, but here got no relevance. Okay, let's relook into it. Information in financial statement must be free from the error and bias. So when we see the word free from the error and the bias, this is reliability. Okay, Next is user must able to identify the differences and similarity between the information in the different financial statement. So this one, you want to know the differences and similarity, so you can compare. So this is comparability. So the answer should be the first one, reliability, the second one, comparability. So the answer should be B. Okay, next. Which change would cause an increase in the liquid asset? Liquid asset is the current asset minus inventory and to the current liability. Means that basically you don't include the inventory for your calculation. Okay, so whatever got the inventory, that is out. So inventory is out. Okay, now here a decrease in the provision for doubtful debt. The provision for doubtful debt will take trade receivable minus provision for doubtful debt. This one, it will go to the current asset. Okay, same thing here. When this one is a decrease means that balance brought down bigger than the balance CD. When this balance CD is the end year is the one we take into here. Okay, so here how to make this one increase? When this one balance CD is decrease means balance CD reduce up compared to this one. So this one reduce your net trade receivable, okay, will increase. So when this one increase, your current asset will increase. So therefore, this answer should be the correct one. Okay. Okay, next, move on. Okay, Abhinav provide the following: purchases cost of sales 2019 2022. Okay, inventory January, December. Okay, what was the rate of inventory turnover for the year ended 2020? So 2020 we have, okay, this one we have to calculate cost of sales divided by the average inventory. So your cost of sales will be in 2020, which is cost of sales is opening inventory plus the purchases, which is they given in here, cost of sales. Okay, this is a cost of sales, so we don't need to calculate. And then our inventory, opening and closing inventory, to get the average inventory is these two, because this one will become the opening inventory for the 1st Jan 2020. So now we calculate 120,000 divide. The average inventory is opening plus closing, 4,000 plus 8,000, and then divide by 2, and then times, no need to type, sorry. Okay, just calculate this, how many times of it. Let's see, 4,000 plus 8,000 divided by 2, 6,000. So 110 divided by 6,000. So 120 divided by 6, we get 20 times. So this is the answer for it. Okay, I think that's all for the question that you asked. So we end in here.